So this is the US oil analysis for Monday 13th of November. US oil, also known as WTI. So we're just going to have a look where prices are likely to go. So I'm just going to grab the pen. We're in a bit of a consolidative channel at the moment. These are the far extremes of the channel, but as you can see, we're pretty tight in terms of the actual trading area. The main trading areas are within a very tight zone, so we can it does appear that the market is waiting for some sort of catalyst to give it some sort of direction. And we've had an extended run to the upside, so this might just be a consolidative range before we might pull back before we get continuation up to $60 a barrel. So I'm just going to zoom a little bit here. There we are. And as you can see, we've pretty much got pretty close to $60 a barrel. We've got an extended run, as you can see, and we've been in this big this long consolidation here from last week, and that's where we are at present. So if we were pulling back, I would be looking to see how prices respond to 53.73 or this 200 period moving average, below which we'll be looking at 55.21, which was the height of the channel for earlier in the year, for a potential bounce. So 55.73 for potential bounce all the way up to this 58.28, or if we do get down to 55.21, if we get a deeper retracement, again we'll be looking for prices to come up to if we do get a deeper retracement down to 55.21, I'm looking for prices to come back up to 58.28, but before that you'll have to challenge these highs just there. Just going to see where these highs are. So these highs are all the way at 56, well not 56, 57.89, so 57.90. So in around 57.90, just there, we could potentially see some sell side momentum before we get up to 58.28. Beyond 58.28, I'll be looking at $60 on oil. Now we do have some dynamic levels before we get all the way up there. However, from a fundamental perspective, we do have the things, a pipeline that blew up in Bahrain. They're blaming the Iranians, so that's geopolitical. It's a bit of geopolitical tension there, which may result in higher oil prices. So at present, we do have the 200 period moving average on the weekly time frame. That's currently sitting at 58.56. So we do have to bear that in mind, 58.56 on the weekly. So actually we could just put on the chart. So let's just go down 58.56 and let's put it down on the chart, and let's get the scaling correct. And let's put 58.56. We may not get all the way up to 58.56 early in this week, but it's important to have it there. So it's pretty close. So it's 28 points, isn't it? Yes, it's 28 points away from where I've got this major level, 58.28. But 58.26, that's where our 200 period moving average on the weekly time frame currently is. So if we go out to the let's just finish up here on the hourly chart. So on this hourly chart, you can see we've had long consolidation, we've had the steps up, we've had very bullish price action. So there aren't any indicators at present, even though we've had a bit of a pullback just here. Isn't really an indication of there's going to be a turn in trend at present. So we do have these levels beneath us that we are looking for potential buying opportunities and bouncing spots for prices to continue their upward momentum. So we're going to have a look at the daily chart. And let's just get the scaling on here correct. And on this daily chart, So we've had our lows, higher lows, higher lows again, higher lows again, and we've had this extended move to the upside. After we slowed down a little bit for a consolidation within this little range before we broke out and headed upwards. Now, as we can see here on this daily chart, we've pulled back quite a bit from top of the channel, and we do appear to be turning a little bit. But what I'd say is positive is the size of the body of the candles aren't very big. They're not as in comparison to the left of the chart. We do have the bullish candles, which do have very strong bodies, closing near their highs, and whereas these bearish candles appear very weak in terms of their body, in that the bodies of the candles are small, indicating the bears do not have complete control of the market, or there may be cautious sellers in the market. So, and even if we do see a retracement all the way back down to possibly, let's just see what that is, all the way down to 55.73, I wouldn't think it's too much of a cause for concern. Overall, though, we do appear to be poised to put in a bull flag continuation to head towards our targets in around that 58.56 and ultimately $60 a barrel, and that's justified by like I said, well, like I pointed out earlier, a series of higher lows and higher highs. So a pullback and then a continuation is the likelihood of the day, and there aren't any dynamic levels. We are here on the daily, so I am just going to have a look at the weekly. We've already mentioned the 200 period moving average. Again, we do look poised to head up towards that $60 a barrel, in around there. And that's where our last swing was, into $60 a barrel. That was all the way back in 2015. It was a counter trend move after this long drawn out sell in oil. So we've got a counter trend move, and then we've had continuation, a small pullback, another continuation. So, but over here on the right of the chart, just there, we're from the bottom of the channel. We've had pullbacks here and there, but overall we've headed upwards on the US oil. More recently, from the bottom of the channel, we're trading through the top of the channel at the moment, and we haven't had a meaningful pullback. So we're going to have a look at the monthly. So on the monthly chart again, the structure is bullish. We've got our lows, higher lows again, and we've taken out these highs just there. So we do look poised for further continuation all the way up at that $60 a barrel mark. We do appear likely to get up to that $60 a barrel mark at some point in the near future. So that should actually wrap up the US oil analysis. So before I go, LCS, like, comment, subscribe. Thanks for watching.